Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's February the 17th, 2012, and like we do every Friday, I'm going to go over all 16 major markets that we track around the globe and let you know what I know heading into the week ahead. So that's going to help you, right? Okay, we do have a long weekend in the U.S. here because it's President's Day on Monday. That means in the U.S. in the stock markets we'll be celebrating very few presidents, maybe I don't know, Reagan. That's about it probably. Anyway, so that was my personal opinion, of course. What we're looking at now is Australia's market, and you'll see the AORD. We've been short on this one for a while. I told you to advance the stop. Was expected to move back to the upside with the overall markets, and that's what happened today. But it was a really mute move to the upside, and it's not really all that strong looking. So what I would do is take your stop loss limit, look at the high of the day, set it 1 cent above that. If you get taken out there, then you're out of your trade on the short side. If she continues to roll over and go lower, that's fine. Let that happen. You just keep advancing your stop to the high of each day after each day closes out, and then sooner or later you will see a reversal of those high points getting higher, and then you want to get stopped on your short and start moving on the long side again. Probably. We'll wait for that to find out whether we're going to go long or not. But for the moment, we are still short. Just advance your stop along the way. The Dow Jones Industrial Average, we have not liked this chart for a while since she broke this major uptrend line. When that happened, I'm no longer confident on the long side, and she starts bouncing around up here, moves sideways. Now she's maybe breaking out. We'll wait and see. I'm not interested in this at all. You can still trade the uptrend in the U.S. markets or in global markets, but you want to find individual companies that allow you to do that without risking so much. You're out here right now, you're really overextended, and I don't like that to be jumping at this point. If you are, that's up to you, but that's not what I'm going to do. I'm going to go look for individual companies within the average that might give me a buying opportunity. Okay, we're looking now at the French CAC 40 index. This one has been in a bullish, well, bearish wedge. Actually, it's trending up, but it's a bearish reversal signal. It's not something that's considered strong, and you expect the breakdown of that when price falls below that lower support line there to be the beginning of the end for that thing. And it gave us a signal here of that was going to happen, then it reversed back to the upside, and it gave it a signal again. Now it's reversing back to the upside. You can leave it be, you can leave it alone, but I would not be long at this particular time and not in this particular market. Quick look here at the German DAX composite. You will notice we are still in a very strong uptrend here. She's not broken the support, and you can stay with that. But I would, at this point in time, I would not actually try to buy this, index itself, an ETF or whatever. I'd go look for individual companies that would give me a nice quality opportunity like you had back here, a nice advance, a nice pullback, something that had a lot more control in the situation, and then I could simply take my buy opportunity, set my stops, and then take my targets and so forth and so on. This up here, buying here, where's your target? Who knows? Where's your stop? Right here, maybe? We'll see. It's not something I like to trade. I don't like to trade this way. If you're a day trader, I understand that, but a swing trader, no. Look for a swing like this. Surprise, I'm still a gold fan at this particular point in time. I like the trade. You can keep a tight stop on it where you can see this blue line. These charts are kept on our free website at PerfectStockAlert.com, updated daily. But right here, this blue line right there indicates the stop, where I would put the stop. If she gets taken out, then I'm out. Otherwise, I'd stay with it. This trade can continue to move in this sideways fashion like it's doing now, or you can begin to see an uplift here, which I actually expect, and I would then advance my stop to lock in a minimum gain. If you want to continue to go higher, fine. But that's one thing I would do, is keep my stop on it and continue to watch this. If she starts moving to the upside, you want to be in now as opposed to later. The Hong Kong Hang Seng Index, another one of those overextended major markets. This is getting actually quite old, isn't it? The major move to the upside, no real pullback in the opportunity here, so you just can't get an opportunity, a quality opportunity to get long with limited risk and understand the upside potential. In this case here, you're looking at the Hang Seng currently closed at the upper Bollinger Band line at or above. You've got a couple of different indications there that she's overextended. Support's way down here. The previous resistance line here is where you were finding resistance, so when we draw that out and say, okay, that's where we've got a breakout, therefore that's where support is. Do you want to buy way up here? I don't feel like it. If you are trading in individual companies within the average, it would make sense to find opportunities that have swings in them. Always pay attention to that. You want situations that have swings, and then you can look at the highs and the lows and determine the direction. Let me show you right quick. For those of you who are brand spanking new to this, high point, higher high, low point, higher low. Direction's easy to determine that way. You know that the uptrend is in effect. So you can be a buyer here knowing that this here will be tested, and that's exactly what happens. India Bombay Stock Exchange, same overall story we've been looking at again and again in the overall global markets. Leave it alone. You can mess with individual companies, but don't mess with the average. Japan iShares, or EWJ, same overall story, nice and overextended. We started to get a nice little breakdown and an opportunity to go short, but before we ever got an opportunity to go short, the BOJ came out and said we're going to stimulate the market, and boom, she took off again. So yeah, there was no opportunity to go short there, and she's continued to move to the upside. But again, I want to maintain some caution, and don't just buy because things are going up. Look for an opportunity that you get a good quality pullback that you can use in your advantage. And this one, I don't see one. Individual companies making up the average, I could see that, but not this particular market. Another item I'd like to note that has not gone away here is you'll notice that price activity, looking at the close of the candlestick individually, you can see that it is trending higher. That's what the blue line is indicating. And you'll notice that the momentum here, here, and here, they're all telling you the exact opposite. They're trending down. And that's not a bullish sign. It's a bearish sign. When momentum to the upside starts to decrease and price continues to move to the upside, it ends up being a situation that is not sustainable. It ends up breaking down. So that's just that much more reason why you don't want to be a buyer here. We've got lots of videos on our free website at perfectstockalert.com that can explain these individual different technical analysis tools that we're giving you right now. There are tons of videos out there to show you how to understand them all for those of you who want to use them. Alright, the FTSE, the London Financial Times Index, we've been stopped out of this trade. We got stopped out 2 days ago. No big deal. I'm not really dying to be a buyer of a market that just won't seem to get up off its duff and move higher. This one has made several attempts and not really gone anywhere. It may break out and leave me behind, but I'd rather just get stopped out rather than try to fight something that's going to go nowhere. Basically, we're moving sideways here, and we may continue to do that, and we may break out, but until you take out that high, you're not breaking out, you're just moving sideways, and that's what we're seeing right now. The NASDAQ, still a very strong chart, but it's also very overextended, and I'm not going to say you should short this guy. You don't want to start shorting until they break the major uptrend line, or at least at that point you can start to consider shorting. You wouldn't want to immediately do so in most cases. But in any event, right now we're looking at this as still being very strong at the upside, but go find individual companies that make up the average as opposed to going out there and buying the average, which is too far overextended. You can find opportunities out there. I know I do them every night. I go through and find opportunities and put them on the website at perfectstockalert.com. One item that I do notice here that I'm not a humongous fan of that I think you need to notice. Notice back here, you come up here, you hit this high, you bounce off, and you maintain the staying above this 50 line. Whenever you do that, you're in a strong bull market. They won't fall below the 50 line in a strong bull market. Again, we have videos teaching how to use the Ultimate Oscillator on our website, but a quick analysis for you. And she jumps up here above the 70 line, that's fine. She maintains that for a while, dips back below, and then she comes up and she hits it and she bounces off again. And that kind of gave us a moment of pause, like we might have a problem, but then she jumps back up above it again and maintains it, and she's doing fine. And then she comes back over here and she goes a little bit lower, but maintains still above the 50. Alright, so what we know is that we have a strong bull market here. That's why it's staying above the 50 line. But again, notice we jumped up here to the 70 line and then bounced off of it. That's never a good sign. If she turns around and breaks out and gets above it, that's fine. But if she doesn't, she continues to press lower and breaks below 50, you're going to have a problem in the markets. You're going to end up having a situation where, again, price is going higher, momentum is nosediving. That's going to be unsustainable. You're going to see a peak form. But right now, we're not there. But just something to keep an eye on, okay? Oil is turning into a monster of a rally here and maybe just starting to take off, and I think you could actually smack me in the face several times for missing a couple different opportunities to be a buyer here. I've just never taken advantage of it, and they've come along a couple times, but something you should definitely look for. You might have a breakout again. If you're a buyer now, keep a tight stop on it, but if she does break out, she can continue to go higher. This is, again, a very strong bullish chart. The US Dollar Bullish Index Fund, this one is basically giving us warning signs that the market may be near a peak. And that should be what we're seeing anyway. I want to show you how I can see that, and I'll show you again on the VIX. Right now you can see that you got the high point here, lower high, lower high, lower high, higher high. So this is starting to tell you that at this time, sell pressure very strong. Stocks couldn't, or the dollar here couldn't actually get momentum to move to the upside. It kept getting pressed down, pressed lower and lower, and then you get a breakout of that trend right there. You start to move higher highs. What happens next is important. I'm watching it very close, and you should as well. Once you have a series of higher highs, you want to wait and see that pullback. When the pullback comes back, you want to know if it's going to make a series of higher lows. Low point here should not be taken out if that is the case. If you get a situation where the low point is not taken out, you get a nice quality pullback, and then we start to see reversal. I'll keep track of this for you guys every single night. Keep an eye on it. If I get an opportunity that I see a real strong buy opportunity for, I'll let you know. And the reason why that's important to you is because this could be indicating the end of the market rally. So if you actually do get a bullish reversal here, you could actually start to see an end to the rally in the markets. So keep a real close eye on that. Why does that make sense? Because when you sell stocks, you are in effect buying U.S. dollars. So when you start to see more and more buy pressure behind the U.S. dollar, then you know less and less buy pressure is going into individual stocks, and that typically marks the end of the rally to the upside because buy pressure decreases, right? Okay, it all makes sense in my head. Maybe it does in yours. Okay, moving on. The Russell 2000 Small Cap Index on the long side, I don't think so. She's broken the major uptrend, and I don't like that. Whenever that happens, and we go all the way back to here, you can see a very strong move, and then she broke through it. Yes, she did move back around the next day and close above it, but I don't play that. Once you've broken the major uptrend, I'm no longer willing to risk anything on you. You'll also notice here, high point, lower high here. We may have something developing. We actually saw this before. Remember this blue line here indicating prices going higher while momentum was going lower, warning us that the move to the upside would likely be unsustainable and it's going to probably break down. Well, that's just what happened, okay? S&P 500 Large Cap Index, it's strong. It's moving to the upside. Stay with it, but do so by going out there and finding individual companies you can buy within the average. Don't buy the average. Silver, basic little bullish chart, but we've been stopped out of this one. We've had several good trades here, but we got stopped out on this one, and she's making a very prolonged or protracted consolidation period upon the previous support or previous resistance here, and that resistance right about there is now acting as support. So that's what's going on there. You're just moving sideways. Keep an eye on it. If you wanted to look for an opportunity on a breakout, this is what's going to matter right there. You need to take out that line. That's these high points. You take out that high point, then you got a breakout. Canada's markets, looking at the TSX, you will notice you've got resistance. You can't see anymore. It's over there, here, and here. And then you broke out of that, and you did that number, pulled back to it, bounced off of it, pulled back down towards it, and bouncing off of it again. This little bit of weakness you saw today, I'd be a buyer of any pullback in here as long as she maintains this support line right here. Keep the tight stop on that, and if she continues to pull back, you'd be a buyer there. Look for a test of this high. The VIX, or the Volatility Index, runs the inverse or the opposite of the S&P 500. Basically, it's an options trading issue, but basically when you see a bullish setup in the VIX, you are seeing bearish signals on the S&P 500. And we are seeing a bullish potential reversal here, so it's important to keep note of. Again, note the high point here, higher high here, starting to get a reversal, higher high here. Then we took this opportunity, gave a buy signal here. Next pullback would be a buy signal. You got one right there. She took off a little bit to the upside. Now she's coming back down. We want to watch this candlestick formation. We want to see if we get a hammer formation, which is what we would like to see. A nice little hammer formation in the next couple of days that maintains a low higher than this low. If we get that, and we see a low point here, a higher low in this area somewhere, and then we've got a series of higher highs and higher lows, what do we know to do? We know to be a buyer of the VIX. If you're a buyer of the VIX, you're selling the S&P 500. That's your theory. Now, if you're seeing that reversal in the VIX, then you're ultimately going to end up seeing it in the S&P 500. So it's important to keep note of this guy, definitely. I mean, if you're not buying it, definitely be tracking it, watching it, see what's going on. Clean this chart up a bit. For now, we are just watching it and keeping an eye on that low at 1610. As long as she holds that low, you may have something developing here that's going to be a pretty big move to the upside, and you can make a lot of money in the VIX if you call them right. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. God bless. Take care. Enjoy your weekend. Enjoy your holiday if you got one. If you don't, great one. You know, always never have enough holidays, right? All right. Enjoy your weekend. God bless. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.